Okay, similar to the last video, we're going to be doing some back testing, but this time we're going to be back testing Euro USD. But before we get to that, if you recall, the last trade we took in the last video for Euro, for the European Euro versus the Great British Pound, we recorded 62 pips for May 23rd. But now today's May 24th, and as you can see, price continues to go up. So instead of 62 pips, we have more than likely got 145 pips. So that's a correction from yesterday's video. As you can see, and for today now, we had another normal buying setup. As you can see, price went up, so we would have entered right around here for a long setup, right around here with a 30 pip stop loss, and gain 73 pips, which is another win. But now let's get to Euro USD. We're gonna be starting from the 9th, just like the last video. Okay, we're gonna be starting from the 9th all the way to present day. So you can see our first trade is right here. So let's look for the bias. Okay, price open out here. Okay, look at price went down. So we're coming into the market on the 9th looking for a selling setup. But if you look closely, we actually had a reversal buying setup right here. Let's draw it out. Just some arrows. See, price went down. We'll just get this will be previous day's low right here. As you can see, price went down, which and came very close to the previous day's low. Then went up for a buy right here. So this is a reversal buying setup. So now we need to look for the entry. Well, let me explain this too. If you're ever in a situation like this, where the MACD doesn't give you any entry, because the candles, the bars are already in your favor, or already going in the direction you want, all you need to do is enter at the very first, like for example, we're looking for a buy here, enter at the very first bullish candlestick or green candlestick right here. If it's a reversal selling setup or a normal selling setup, you do the same thing but reverse. Instead of looking for the first bullish candle or first green candle, you look for the first bearish candle or red candle and you enter right after it. So I enter right here. 30 pip stop loss. And price went up for 74 pips. So let's record that. So that's our first trade on May 9th. So now we're coming to the market the next day, which is May 10th. We're looking for a buy. The price is going up. So price dropped below right here and show it up. Price dropped below As you can see, price dropped below the Asian session, but then it didn't come up. Oh no, it didn't give us any entry. As you can see, still all red candlesticks. Not candlesticks, still all red bars on the histogram. No green ones. The green ones started after this drop right here. As you can see right here. So our entry would have been right here on this bearish candlestick. 30 pip stop loss. And we just came short. Sorry. We just came short of a break-even trade. So this is a loss. So let's record that. Which is unfortunate, but we move on to the next day. So okay, now we come in on the 11th of May and we're looking for a sell. As you can see, price went down, so we're looking for a sell right here, and we got a sell setup, a normal selling setup right here, as the price went above the Asian box and then came down for selling setup. Let's draw it out. Price went above right here and then went down for sell setup. So entry would have been right here on the very first red bar on the histogram. $30 pip stop loss. And price went down for 53 pips and then would have went up back and would have hit. If we would have left this trade open, it would have went up and hit our stop loss at break even right here. So normally we would have just taken this profit right here, 53 pips. So let's record that. 53 pips. So now we're coming in on the 12th of May. And as you can see, on the 11th of May, price went down. So on the 12th of May, we've been looking for selling setup, and we got one right here. We got an advanced selling setup. Let's draw it out. As you can see, price went down. Let's make this look a bit thinner. As you can see, price went down below the Asian box. Let's draw the Asian box too. Always. A rectangle right here. As you can see, price went down below the Asian box right here. And this was been in the middle. Let me draw the middle one time. Draw line. This would have been in the middle, so price would have dropped down below the Asian box. Then went up and bounced off of the middle of the Asian box and giving us an entry for a sell right here. So let's get rid of all these arrows. So our entry would have came right after the very first bearish engulfing candlestick right here, after the bounce off of the middle of the Asian session. It's got a short. So our entry would have been right here. A 30 pip stop loss. Price went down all the way for 148 pips. Or if it would have kept it a little bit longer, it would have went for 153 pips. But let's take it at 148 pips, which is more realistic. So now let's record that. By the way, this is almost a 1 to 5 risk to reward ratio. So what was it again? 148 pips. Make sure 148 pips. So now we come in on the mid 13th and we're looking for sell again. As you can see, price went down. Adjust this. Price went down on May 11th or May 12th, I mean. So May 13th we come in looking for sell, and we actually got us a normal selling setup right here. As price went above the Asian session, then drop. Let's clear this. So we just need an entry, which we got right here from the MACD. Okay, which was 44 pips profit. So we should call it. $44 pips. Okay, now we're coming on the 16th of May, and we're looking for a buy setup because price went up on May 13th. And did we get a buy setup? Yeah, I think we did. But not sure if it's a profit. But as you can see, we have an advanced buy setup right here. Let's just draw the Asian box to make it clear. As you can see, price went up above the Asian box. I'm missing something. I'm missing the middle of the Asian box. Right, somewhere around here. Okay, price went up above the Asian box, dropped down, bounced off the middle of the Asian box, then went up. But let's see if that would hit our stop loss or if it was a profit. Can't remember. Okay, a long position right here. Would have entered right after this first bullish engulfing candlestick right here. And price just missed our stop loss. Wait, no. Oh, this would have been a break-even trade because price went up for 20 pips after this candlestick, then dropped back down, and which would have hit our stop loss. Cause we have broke even at that point. So let's recall this as a break-even trade. We just need a profit, no loss. Oh, let's put that back. Okay. Now we come in on May 17th. We're looking for a buy setup as price went up on May 16th. Let's draw the Asian box here. Hold on a while. Okay, let's get back. Let's draw the box. Let's put the middle of this session. Okay, and as you can see, we kind of got an advanced buy setup right here, which is not very clear. So I'll try and break it down. If you look right here, you have this bullish candle right here, which broke out of the Asian box right here. Zoom in. The price broke out of the Asian session, went up with this bullish candlestick right here, then dropped down with this bearish candlestick here with the long wick, which came very close to the middle of our Asian session box. And then give us this bullish engulfing candlestick right here, which would have entered on. And how I normally determine whether it's a good trade or not to take, I try and line up the take profit with the middle of the Asian box. So I say, okay, so I say, okay, if I would have entered right here on this bullish candlestick right here, I would need the stop loss to be below the middle of the Asian session. So 30 pips, which falls way below the middle. So once the stop loss falls below the middle, I will determine it as a good trade. I will label it as a good trade, I mean. Which in this case was, and price went up for price went up for 105 pips, which is a good trade. Okay, 105 pips. So far we have one losing trade, I think it's one break even, and the rest are profit. Okay, now we're coming on the 18th of May, and we're looking for a buy setup because price went up the previous day. Looking for a buy setup. So, and we have one right here as price dropped below the Asian box and gave us a normal buying setup. So let's see. Price drop below, and we've entered right here. And this trade would have given us a break-even trade, because price went up for 22 pips before it dropped back down. So this would have been break-even. Let's get that down. Break-even trade. So now, the next day now, which is the 19th of May, we come in the market looking for a sell. But you can see price give us a normal, which will look like a normal buy setup as the price drop below the Asian session box. So in this case, we normally look at the previous day's low and see where that lies. So let's draw it out. Which would have been right here. And as you can see, let's try it up. Price drop below the Asian session box and came very close to the previous day's low, which means that this trade is a reversal buy setup. Price went down and the price shot up for a reversal buy. So make sure this is long here, long. So we'll look for entry on the very first green bar on the histogram. Entry right here. 30 pip stop loss. Let's see where price went. In this case, price just kept on going up and up and up. So this trade, you could have held this trade all the way up for 250 pips over the span of 4 days. 250 pips, which is very impressive. Let's recall that as 250 pips. Okay, now we come in on the 20th of May, and as you can see, we're looking for we should come into the market looking for a buy. We're looking for a buy setup. Let's draw out the Asian box because it's not very clear. Okay. Okay, as you can see right here, we're supposed to be looking for a buy setup, but instead price went above right here. The price went above the Asian session box right here and gave us a reversal sell setup because the previous day's high, which is right here, falls right above where price went. So it's a reversal sell setup, as you can see. Price, we have entered right here on the first red bar on the histogram with 30 pip stop loss, and price went for 43 pips before going up back, which is a profit. Right here is a profit. Okay, now we come into the market now on May the 23rd looking for a sell, because as you can see here, price went down on May the 20th. So we come in on May the 23rd looking for a sell, and we actually got a false selling, normal selling setup right here. Wait, no, actually we got no setup. We got no setup right here. Let's draw out the Asian box, make it clearer. As you can see, price stayed within the Asian session range, then just shot up far above the previous day's high, even the previous day before that high. So this will be a no trade. So let's record that as no trade because we didn't get any setups. So no trade. Now we come in, which is today, on the 24th of May 2022, looking for a buy setup. For a buy setup, as you can see, price did the same thing as it did on the 23rd, which just shot up far above the previous day's high, which would have given us a no trade there. Let's record that as no trade. Put that above. And by the way, this is how the indicator looks. on the present day. Okay, now let's see how many trades. Now let's calculate our win rate. I mean, to calculate our win rate, we only count the wins, the losses, and the break evens. We do not count the no trades because no trades occur. So let's see how many trades we got. We got 1 here, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we got 10 trades. 10 trades total. Let's bring out the calculator. Okay, we got 10 trades total, and let's see how many we won. 1, 2, 3, 4, 5, 6, 7. So we won 7 out of 10 trades, which is a 70% win rate, as you can see on the calculator. 70% win rate for 10 trades. So it's 70%, and we only record a 1. I think it's 1 loss, 1. Yeah, we only record a 1 loss within these 10 trades. So let's calculate how many pips we have profited within this period. Start from the beginning. So we have 74. Start over. We have 74 plus 53 plus 148 plus 44 plus 105 plus 250 plus 43 equal 717 pips. And now let's subtract the one losing trade from it, which is here, which is 30 pips, because our stop loss is always 30 pips. So let's subtract 30 pips from it. As you can see, we would have profited 687 pips just from these trades. 687 pips. And if you add on what we made yesterday, no, what we made on I think it was European Euro against the Great British Pound. If we add on that to this, it would have been way over. As in way, no, would have been, no, let's see. We got 299 pips profit for that app. And if you add on what price did today for it, we've gotten far over 1,000 pips profit just from 2 currency pairs. So 2 currency pairs would have made us 1,000 pips profit in like 2 weeks. That's crazy. But back to today, 687 pips. If we were trading at a standard lot size, which is 10 pips, which is $10 per pip, would have made $6,870 within this period, trading at a standard lot size. Think about that. $6,870. $600. I hope you enjoyed this video. Hope you learned something again. If you were confused at any point, make sure to revisit the course, study it over again, do some practice on your own, then come back and see where you made your mistakes or where you were confused at. Make your corrections and so on. But 687 pips is nothing to play about. Get with the program. I'm out.